Hi, I'm Ben Reppond. Today is May 28, 2025. Welcome to my YouTube broadcast. Today is going to be market insights. I'm going to go through the stock market and show you what's going on. This is a picture of the 6 major indexes in the world, basically equity indexes, plus the U.S. long-term government bond index, or ETF. And so you can see in the yellow box, this is last week, that the S&P 500 was down 2.54%. That's down 4 lines. And then most of the others were down around 2 to 3%. And the emerging markets were down 0.06%, almost break even. And the developed markets, foreign markets, were actually positive. 0.92. The pink box shows year-to-date. Year-to-date, the emerging markets and developed markets up significantly. Developed up 16%, emerging up 10%, and then all of the U.S. markets and the government bond ETF all negative year-to-date. And the S&P being down 1.19%. through last Friday, year-to-date. There were 20 out of 28 green dots, fairly favorable, compared to 23 of them last week. So, in other words, the week was more negative than positive, but on a year-to-date basis, it's basically recovered quite a bit from the first week in April. When you take the S&P 500 and break it apart into its 11 sectors, the component parts of the S&P 500, in the yellow box you can see all 11 were negative last week. And on a year-to-date basis, 5 out of 11 were positive, and the remaining 6 were negative. To the far right, you can see which ones were above their 20, 50, 100, and 200-day moving averages, day moving averages, and those that were not, indicated by a red dot. So in the short run, more negative, on a year-to-date basis, recovering. This shows the chart for a 3-year period of time. At the very end, you can see a pullback at the very far right, a little bit of a pullback. This is the S&P 500. That is that 2.5% decline for last week. But the bigger picture over 3 years, you can see where it has definitely gone up. The pullback at the far right, where it went down quite a bit and came back, that was during the, up until last week. So it was the first quarter and then recovery after the first week in April. Same chart, except I put it on a candlestick chart. So the hollow candlesticks are more positive, where it starts here and ends here. The red ones are more negative, where it starts here and ends here. Those are weekly charts, or weekly candlesticks on a 3-year chart. The S&P 500, represented by the ETF SPY, this is a same chart, except I compress it to a 3-month period, not a 3-year period, and I change it over to a daily chart, not a weekly chart. So it gives you a little more micro. At the very far right, that the last 4 candlesticks that went down, that was from last week. That would be the last 4 days of last week. This is a relative strength chart showing the NASDAQ as the numerator and the S&P 500 as the denominator. And you can see that the NASDAQ 100 is still in a mode of outperforming the broad index, the S&P 500, because at the very end, it slightly goes up. Same thing here. This is a relative strength growth ETF, SPY-G, divided by SPY-V value. and it has been in a rising mode since early April, and continues to rise. The broad market, the S&P 500 compared to the small cap index, IWM, Russell 2000, this shows that the large cap, the larger companies, are outperforming the smaller companies by the move up at the very end. And then over this 30-month period of time, same thing. You can see that over time, during this period of time, 2.5 years, that the S&P 500 large companies are outperforming small companies. Long-term government bond is terrible. And as interest rates rise and as bond yields rise, which they have been, this causes the bond prices or the ETF prices to decline. So at the very far right, lower right, the ETF TLT, which is the 20-year long-term government bond, went down last week and continued to decline this week, a function of rising bond yields. I've said it before and I'll say it now, this is terrible for traditional buy and hold 60-40 stock and bond portfolios. This is the 40%. The 60 is equities. Equities go up and down. This is the counterbalance, which is not doing a very good job of holding up the other side of the equation. I put the long-term government bond TLT since August of 2024. So that would be about, 8 or 9 months. So when you look at that period of time on a day, this is a weekly basis, but I put it on a candlestick chart. And so you can see for the past, almost 2 months, it has definitely been declining. The dollar continues to weaken, and that has been true since the beginning of the year. Gold, as contrarian, I think when you look at bonds doing poorly, the dollar doing poorly, the S&P has definitely gone down, even though it's recovered some shortly. There's still a lot of uncertainty, and the economy has a lot of uncertainty in it. What is the counterbalance? Where's the good news? A lot of times precious metals will pull up the slack, and that's what you see here as bonds hitting an all-time high, or at least in the most recent period, an all-time high. Silver, not as compelling a story, but it's also getting close to an all-time high for this period of time, and been going up. Silver is just a rougher ride. It tends to go up and down in a more volatile way. Bitcoin continues to rise, and so those who follow Bitcoin are happy. And this is the ETF BITO, but it's hit, it has hit, I guess, an all-time high. The volatility index, this is a 30-month chart, a weekly chart, and so you can see that the volatility index has come way down since early April. Although this past week, because the market was more negative, it did force the volatility index up a little bit, which you see at the far right of the chart. I compare the S&P 500 to South Korea because it's such a good chart. It's an easy chart to work from. I could show other countries, developed or undeveloped, but they become more volatility in the chart. From a relative strength basis, South Korea is just easier to work with. So at the very end, at the very far upper right, you can see that when it came down, that favored South Korea. When it goes up, that favors the U.S., but this last week, again, favored South Korea because it's a slight tick down. Gold and silver. The gold had a gain of 4.8% over spot price over a week ago, and the silver was 33.51 spot price over the price from a week ago, which is a gain of 3.8%. The gold-silver ratio, gold numerator, silver denominator, is 100 to 1. Definitely favoring gold as doing better, but favoring silver as a better value. The monster box, this is a box of 500, about like this, silver bullion, pure, approximately pure silver, is $17,725. That's the current price. That includes a $1.94 markup for retail, and whether you buy it online or you buy it from a local retailer or whatever, you are going to pay a markup on it. And the current price for that is $1.94. And that brings the over spot price, that brings the total price to $35.45. And this is based on my son, who is a precious metal dealer in Nashville, my son Preston. And by the way, I'll talk about this more coming up. I mean, here it is in May. So 4 months from now, in September, I'm going to go down there to Nashville to spend the weekend there while he's at the International Monetary Exchange Show at the Convention Center, and I will enjoy that, being around all these coin people. Okay, if you have questions or comments, leave them in the comments section below. Thank you for watching.